Welcome back to part 7 of a series on navigating business decisions. This is a report that I created in conjunction with a group of students at Kent State University. We provided a survey to business owners in Northeast Ohio in late 2024, and based on the answers that we got from that survey, these are some of the findings that we thought would be really useful to other business owners. So in this section today, I'm going to talk about gender-based leadership patterns that we found from the data in the survey. Okay, so first of all, the survey itself did not ask any respondents to identify their gender, and yet there are ways to find that out based on who was responding if they shared their names. So I basically took the responses and then I identified anybody that I could with the particular name and looked them up, and if they were male, I assigned them to the male leader category, if they're female to the female. So this is not a comprehensive list of every single person who responded, but it is a pretty accurate idea of, based on the responses that we got and who we could identify as being male or female, we put them into these categories, and there are some really interesting themes that came up from those two groups. So 2/3, 66% of the respondents that we identified as being male had certain qualities and decision-making traits. So let's just go over those really quick. So first of all, we found that male leaders in general, with the answers that they gave and the way that they wrote their responses, they tend to be, surprise, surprise, decisive and action-oriented. They tend to prioritize speed and efficiency when they make decisions, and they tend to want clear and quick choices based on data, past experiences, especially in high-pressure situations. Really no surprise there, but again, it is correlated with the data that we collected. Also, we noticed that male respondents tend to like hierarchical structures, meaning that they have a centralized decision-making but top-down leadership style. So they like having kind of an authority, clear line of authority structure, and that they definitely prefer having control over collaborative input. So they'd rather kind of tell people what to do rather than ask for input from everybody. And it is a different style, but it is also not wholly surprising. I mean, I've definitely seen male leaders that want to have collaborative input, and I've also seen female leaders who prioritize more of a rigid approach. So it doesn't really have as much to do with gender, but there was more of a tendency for male leaders to have this structured leadership style. Okay, then the risks. Males tend to take bolder competitive risks that drive growth. And this is not a surprise to me at all. In fact, I did do a deep dive on female entrepreneurial decisions, especially in financial outcomes when it comes to female business owners. You can check that out on my website, LaConteConsulting.com. It is much more likely that a male business owner would take risks and risk more when they make decisions compared to female owners, even in the same industry. So male owners in our survey tend to respond more quickly to market shifts, and they talked about that in their responses. They also believe that decisive action provides an advantage. So making decisions quickly, even if you don't have all the information, is strategic advantage. It's just a very different way of leading and managing compared to more of a female-led approach. And finally, delegation. Some male leaders that we interviewed struggle to delegate their authority, particularly in complex or high-stakes situations. They would prefer to do things themselves, and that can lead to bottlenecks, and I've seen that firsthand. Maybe you have too, where when someone is basically a control freak and they will not allow decisions to go to others, they have to have the final say. It can put an enormous strain on a business, especially as it gets larger, where when you have a much more collaborative or like more trust in people to make decisions based on their expertise and their position in the company, that can allow for more flow of information and for progress. 1/3 of our respondents were identified as females, and they have a very different tendency toward leadership styles and decision making. So first of all, females are more likely to involve their employees, outside advisors, and external stakeholders in making decisions. There's more of a sense of shared responsibility rather than a hierarchical, rigid, top-down leadership. Also, emotional intelligence and empathy are really prioritized in companies led by females. So when they have employee engagement and relations discussions, there is more of a focus on the emotional intelligence aspect. When they interact with clients, there is more of a tendency to want to connect with those clients on a deeper level and empathize with their pain and their struggles. And then conflict resolution is often done in a much different way with a female-led business compared to a male-led one. So strategic patience and risk mitigation. Female leaders tend to be more cautious and have a long-term approach when making decisions. They're more likely to carefully evaluate potential risks before jumping in and making significant changes. This is not everybody. It's not the only way leaders do these things, and certainly there are examples of how the opposite could be true, but there is a tendency for female leaders to be more cautious when it comes, especially to very high risk decisions, which could potentially hurt the company or affect them in a very negative long-term impact rather than choosing to make decisions that are less likely to cause harm. But of course, the downside of that is that by not taking such big risks, they also can't reap the rewards of having a faster growing and more high revenue company potentially. And then for overcoming barriers, many women that we surveyed highlighted challenges such as their underrepresentation in executive roles. For example, there were some comments from female-led businesses about how they had that challenge either in finding, retaining, or their own personal experiences of being pushed out of executive decisions, or how that just wasn't applied much in their organization, or potentially just discussions about how this is a problem in their industry. We also noticed that there were limited mentorship opportunities potentially for female owners or leaders, meaning that there could be problems with making sure that female leaders are rising to the top at the same rate of male leaders. And let's be honest, there's always bias. We tend to be biased based on our own experiences. We tend to not see experiences that other people are having, especially if they're very different than us, just human nature. So this also is a pattern that happens sometimes in a female leadership. So these barriers can be difficult for female leaders and owners to overcome. And there is an important on having a resilient attitude and strong professional networks in order to succeed. So may not surprise you either, but I just think this was a really interesting discovery that we made through the survey. So again, if you want to find more about this report, you can go to laconteconsulting.com/Ohio-survey. I'm Grace LaConte. I really enjoyed collecting this information with the help of students at Kent State University. So the comparison of male and female respondents, I just made a quick chart here about the overview of what we found. So most of our male respondents, 66% of those that we identified were male, so they were primarily in manufacturing, construction, real estate, and energy industries. Female respondents were predominantly in construction, real estate, luxury retail. There weren't as many female leaders and owners in manufacturing. Companies that male owners tended to have ranged from 1 million to 3 million, and they tended to have 11 to 250 plus employees. And then the female respondents tended to have a lot more companies that were owned and led by females had under $1 million to a max of $10 million. So I don't think we had any respondents that we identified as female who had over 10 million in revenue. And they tended to have between 1 and 50 employees. Decision-making styles, so males tended to rely on structured tools like financial forecasting, the SWOT analysis, which again you can find on my website, and business analytics, and also gut instinct, where females primarily relied on their intuition or gut instinct, their local networks, so other business leaders and others in their community and their industry, or consultants, and they less frequently used structured tools. So I think that's a really important point. It could be for a variety of reasons that they're just not as comfortable using analytics tools, aren't familiar with them, they were never introduced to them, they haven't been encouraged to try them, maybe they are uncomfortable with that much math or data. I mean, there are obviously reasons why these things happen. I have also met a large number of male decision makers who do not feel comfortable with structured data tools as well. So I don't think it's always a gender-based thing, but it does concern me that so many female owners are kind of shying away from these structured decision-making tools because they can be so useful in looking at opportunities for growth that are not as visible from the outside. Okay, so risk appetite. So this is how likely you are to take risks. As we mentioned in the previous section, males tend to jump in and take more risks. And they do invest more in technology expansion and innovation compared to female owners and leaders. Where females tend to be more risk averse, they're more cautious when it comes to risk, and they focus on incremental improvements and operational continuity, making sure the business continues for a longer period. Challenges for male leaders, workforce, which is the same for females, cash flow management, same for females. And then for males, regulatory changes and market competition. It's slightly different for females. It was limited access to resources. So this could be financial resources, information, expertise, that kind of thing. For metrics of success, males prioritize profitability, revenue growth, market share, and customer satisfaction. Females focus more on customer satisfaction and employee retention, and profitability was not mentioned nearly as much from female respondents. So our insights here are female leaders tend not to use data-driven tools as much, and this is a gap in how they can access and be aware of decision-making tools that could make their business more successful. There is a difference, a huge difference in how male leaders put themselves into situations where they have the potential to grow their business and be much more successful compared to female leaders who prefer and oftentimes choose not to take those risks in favor of stability and more cautious choices and investments. And then also, I've worked extensively with manufacturing industries, so there is definitely a gender gap with females not being represented nearly as much in manufacturing as male. There's still a lot of opportunities for female manufacturing leaders to provide their expertise and their input. And this is just a long-standing kind of history in that industry, and also not as much mentorship for female leaders within the industry. And then finally, the external expertise from consultants and other experts. I think that both genders, male and female, could definitely benefit from having an outside point of view and exploring new opportunities. So strategic implications. So what can we learn from this? So first of all, it's really important to adopt and look at data-driven tools. I think that can be scary if you're not familiar with them, but the more you're open to learning about new tools that could help you make good decisions, the more likely you will be to actually have access to information that you may not have seen before. Also, workforce issues. Of course, it's hard to find qualified talent. It's hard to retain people, but that can be overcome with a combination of the two ways that both genders are doing this. One is with this more structured leadership approach that's more direct compared to one that is very big on engagement and empathy. And I think there can be a good combination of those two in order to keep employees happy and make them want to continue working with you. Mentorship is fantastic when you have opportunities that are given to upcoming leaders to learn from those who have already moved into higher levels. And when there's a collaborative approach between those two, there's so much wonderful stuff that can come out of that. So it can actually go both directions too, where lower level managers and leaders can actually help to influence decisions at the top. And finally, the balanced risk taking. So I think sometimes extreme risk taking can also be very dangerous, but not stepping into the ring at all and avoiding risks, being averse to challenges, is equally dangerous and potentially damaging. So it's important to understand your risk appetite and maybe identify some changes that can happen in order to improve your chance to help your business succeed. So males tend to run larger firms and take bold risks. Female leaders tend to have smaller businesses, and I've linked to my female research on female entrepreneurs here with a relationship-focused approach, but both face workflow and cash flow challenges and can benefit from mentorship training and objective outside input. So I hope this was helpful to you. Be sure to subscribe if you want to see more videos like this on the report. And if you'd like to actually read the report, you can go to my website. And if you have a question about this, leave a comment below, and I'd be happy to answer that for you.